So this afternoon is going to be the second part of the training series that Chelsea and I have collaborated. So I would like to thank Chelsea for this opportunity that she has given me to present to everyone here and record it for the CCTW community. So as I said, so today we're going to be talking about the technical analysis for beginners. So this is designed for people who have no experience at all with technical analysis or little experience. And also, I think that people who have some experience will benefit from this. It's just as a good review. So with this in mind, before I would like to start, I would like to start with some housekeeping. So I'd like to remind everybody that all communications are for educational and entertainment purposes only. I am not, nor claim that I'm a broker, a dealer, a financial or tax advisor. And you are agreeing that you understand that there's a risk involved with any stock market as well as cryptocurrency, and that whatever money that's made in loss is not associated to me or the crypto coin trader women's in any form or any way. So with that, with the disclosure, let's get started. So for this course, I divided it into 4 different sections. So here I will start with some introduction, and then with getting started, we'll learn about Candlestick, the trading view, the software that I use, paper trading, and we'll talk about some time frame. Moving on, we'll be talking about a little bit about common strategies. This is basically an overview of what common strategies that we do for trading or what most traders are using. And then finally, the strength and momentum. Sorry, I'm going to have to move my, there you go. I don't see my full screen. The strength and momentum, where we were going to talk about an RSI, what is an overbought, what is an oversold, and how to use Bollinger Bands, conclusion, and some available classes that I have. Okay, so first, we'll start off with introducing myself and the team that I'm coming from. So I am from the Stocks and Crypto Stallioners Group. So we are an options, swings, and cryptocurrency trading group, and our mission is to provide valuable resources to enable members to invest in stock market and cryptocurrency. So we have a community we have a community in Facebook and also in Discord. And you can follow us. We have a TikTok, we have an Instagram, the Twitter, and all that stuff. And about me, my name is Gladys. I am an options trader. I am also a swing trader and a day trader. And I'm a crypto advocate. And I am a moderator for the Crypto Coin Trader Women's Group. And I'm a technical analyst. And some groups have coined me as a chart queen. I would post charts on Twitter and Facebook. And I have some decent number of followings. And during the day, I am actually a scientist, a biochemist that works to solve problems with unmet medical needs. So I do cancer drugs and other autoimmune disease. So I am in the business of making people's lives better, of making patients' lives better. So along that line, I thought that because I have the skill of reading charts, I would like to make traders' life better by contributing of my knowledge and teaching. So this is why I pursue by creating and designing this course. So with this course, my objective for today, so again, this is designed for beginners. This is for people who have no experience in technical analysis. So at the end of the day, what I want my viewers, want my student to learn is that they learn how to use TradingView for charting and paper trading. I would like for them to understand the anatomy of a candlestick. So it's not all foreign to them when they see a candle. And I would like for them to see and identify the overall trend, because after all, the trend is your friend. So with that being said, I would like to talk about the different time frames that is used for trading. And then we're going to move on, and then I'm going to show you how to draw trend lines to identify the support and resistance. So if you don't know what support and resistance is, it's probably not a good idea that you're trading. So today we're going to cover that. And then we're going to move on to talk about what moving averages are. And I want to make sure that you guys understand what moving averages mean and how we use it and the importance of that. Because using moving averages, we can use it to find the support and the resistance. And then we're going to talk about the MACD to identify where the market is going, then the RSI, that is the strength of the market, and finally Bollinger Bands. I know this is a lot, and I'm going to try my best to explain it to you so at the end of the day you understand it, not only just knowing it, like just to understand the concept of it, the math behind it. We're not going to solve any problems, the math behind it, and then how traders are using this statistical techniques to analyze the chart, because that is actually the heart of technical analysis. So, okay, let's, so next page. Okay, so first and foremost, what is TA? So what is technical analysis? So technical analysis, you probably might have guessed, is a discipline used to evaluate an investment or a cryptocurrency to identify trading opportunities. Identify trading opportunities. Okay, so not predict or not like it's not set in stone. So this is gathering data from periods of time, you know, so because people believe that we can use previous data to know what could potentially happen in the future, right? To see patterns, to identify what would happen in the future using statistics, using mathematical tools. So, um, so that's basically what I just said. And what technical analysis is not, it is not a crystal ball. It is not used to predict where things are going, or it's not the answer to everything, because if it is, then trading will be easy, you know. So um it doesn't really tell you if the price really go up or price really go down. It usually tells you these two scenarios, that if prices go up, this will happen. If prices goes down, this will happen. It's more likely it's going to happen this way. So it's statistics, the probability of things that will happen in the future based on the past. So it is not manipulation proof. I would like to stress that out, because if you guys have experience in the past couple of days, there's so many things going on, and no matter how good your chart is, no matter how good your TA is, you know, one tweet from one person will completely obliterate every all your lines and all your trend lines. And also technical analysis could be wrong. You have to imagine that technical analysis done by a person. It's not by many different people who have many different views on charts, who are seeing different patterns, who are seeing different things. So you know, not one chart is the best. So with all of that being said, you can now get rid of your crystal ball that you guys order on Amazon, because that's not what technical analysis is. So again, so moving forward, so what is technical analysis? There's another analysis called fundamental analysis. So technical analysis is numbers, statistics, the trends. So we use this for short periods of time to develop patterns, to see the supply and demand, to go with momentum, to trade. And then fundamental analysis, this measures the intrinsic value of an asset. So intrinsic value could be financial statement, you know, like prospectus of the company, upcoming products, earnings. Those are like you're looking like 5-10 years down the road. So it relies on information that spans for years. So with that, the takeaway here is that you can use both, you combine both strengths to help you become a better investor. Sorry. Sorry, guys. Give me 1 second. Chelsea, could you pause it for a little bit?
Yeah, no problem.
Sorry.
Okay, we are resumed.
Okay.
You good?
Thank you. Sorry about that. Little one needs something, but okay. So, yeah, so the takeaway here is that to be a really good investor, you want to combine both strength to be in your arsenal, right? So the more tools that you have, the better you are with choosing the right investments. All right. So And then I also want to touch upon the difference between trading and investing. So trading is about making frequent short-term transactions, so you basically trade for money, right? So you put in some money and you buy an asset, and then you could be there for a second, a minute, a day, or a couple days. And the goal here is you want to beat the market. So I was told one time when I was taking another class that think of the stock market as this angry dragon, that fires, that have this angry fire, that anyone who tries to cross the line, they'll get burned. So think about that every day. Every day you're fighting against this dragon. And if you want to be as quiet as possible to get a small amount of money from that big pool of money that the dragon is protecting. So if you win, take that as a blessing from the market, so don't get too confident because trading is not easy. On the other hand, the less riskier part is investing. So this is a long term that you don't really care what happened the day when it goes down, say 10% or 20%. You're looking more of like a 7 to 5% gain, like over time, like over 5 or 10 years. So that could be like your 401k investments or any other investment that you don't look into. A lot of people use assets like pay dividends. So for dividends, for example, like even if the market crashes, you're still getting paid by the company, so you kind of recoup that loss. So in a way, that's a pretty good strategy. So for my in my crypto experience, what I do is I do some trading, whatever where the momentum is, and then whatever I make profit, I buy my long term. So you have a list of your long term, and then that's the one that you don't really keep. I mean, you don't really look at, you don't really sell as much or don't really panic. However, I just wanted to remind you guys that both trading and investing involves risk. So this again is all dependent on your risk tolerance, right? So like how much money are you willing to invest? Like think of that as the money that you're also willing to lose, right? So you don't want to borrow money to invest nor trade. So, okay, so now we just finished the first part of the topic and we're going to move on to the next part. But before that, I just wanted to make sure if you guys have any questions or comments. No? Okay. So, on the next topic, I want to talk about the candlestick and trading view, paper and doing paper trading, and what is the best chart time frame to use. So, candlestick. So some of you are probably like, when you guys look at a chart, there's lines and then there are candles. So here is the anatomy of the candle. So this is the body, and then there's these two wicks. And there's the highest price of the day and the lowest price of the day. Here is when the price opened, and here is when the price closed. This scenario is when the opening price is less than the closing price. You get a green candle. On the contrary, if the opening price is less than the closing price, in this case, you open at a higher price and you end at a lower price, you get a red candle. I believe some candles are like the black and white, but in this scenario, I would like to use the red and green to show the contrast. So what happens if your opening price equates your closing price? The candle that you will see is what we call the doji candle. The doji candle have the opening and closing price almost almost the same. So that's why you have that line. So this line could also be on top or at the bottom. But the idea here is that traders are confused. They don't know what to do. They don't know if you're going to buy or they're going to sell the product. So this, when you see a candle like this usually signals a change in behavior. This is this is when it could go up or it could go reverse. So that is the candle anatomy. So the next part is the trading view. So I use trading view for charting. This is the software and you can sign up for a free account. and then you can activate your paper trading. All you do is you need to, like, at the bottom, you need to right click and activate it. It will be right here. So I'm going to show that when I open the software later on. So with that, I'm going to then, so next part is our time frame. So this is the time frame that you can choose from. So it ranges from seconds, minutes, hours, days, week, and month. So a lot of traders or a lot of investors ask, what is the best time frame to use? So when I was first starting, I was very confused. With people are like, oh, what is 15-minute? What is 4 hour? What is 1 day? What are you guys doing? So what we're using it for is, if you're scalping seconds to minute, you use about the 5-minute, the 3-minute, and 1-minute candlestick. And when you're day trading, we use the minutes to hours. If you're swing trading, you're using hours to day. And if you're a long-term investor, you use the day to month. So I'm going to show you what that means. So I'm going to open my trading view. Okay. So we're going to go over the trading view paper trading as well as the time frame. So here is the BTC/USDT chart from BitPay. And let me close this. All right. So here I set it up as candlestick. And right here on the top left, oh, sorry, let me retrace. So here is the paper trading part. So all you do is you need to right click on it and activate it. So it has to be green for activation. So if you want to set a trade, all you got to do is to right click and set a trade. Hold on a second. And that will be, hmm, okay, I don't
I
have,
think you
okay,
may
there
have
we
to
go.
click the little plus sign,
The
maybe.
control, yeah. So for the Mac, I'm using a Mac. I'm not using my mouse. So for the Mac, you hold down the control and you click, and then you click on trade. So if you want to buy or you want to sell, it will then open another window, and you can either buy with the market. The market is the fair price that what the bidders and bidders and asker are giving. So it will probably sell you at 40,680. The limit is the one that you set. You can set it to whatever you want, right? So you can set it for, say, 35,000, but most people are asking for 33,000. So that is such a big window. I didn't even realize that. And here's the quantity. And here is if you want to take a stop loss. So that's another topic. So you can just skip this for now, and then you can just buy it as paper trading. So you just click this, and then you are trading. Okay, so that was just an example. Obviously, I did not look at the price or whatsoever, but this is how you do paper trading with TradingView. And then you'll have a sign here that says buy limit. Okay, so time frames. Yes, I want to cancel. Time frames. So the time frame for TradingView can be found here in this little icon D. So I am at the 1 day candlestick. So 1 day means each of these candles represent a day. As I mentioned earlier, you can also look at the minute. You see the minutes, you get so many tickers, and it's completely different from the day. See that? It's a lot of movements in the day. So what I would do as a trader, I would go first to the weekly. And then I will try my best to identify the trend. Is there a trend that I'm seeing? Well, there was one uptrend that was going, and then all of a sudden, look at that drop. Okay, now let's look at the daily chart. Okay, zoom out. You see that, okay, so it's been a bull run, a bull run, a bull run. And look at this, some distribution, some selling off. Okay, so that's daily. So if I'm a long-term investor, I'm going to be like, okay, maybe it is going up. I see that. And maybe it's a good time to buy because it is lower. But if I am a day trader, I'm going for I would start with the 2 hours and look and see. Okay, it's pretty flat. And then I'll go right into oh, sorry, not this one, the 15 minutes. Okay. So I'm planning to be in this trade for, say, a couple of hours only. I'm not going to leave this overnight. This is like the trade that I'm going to do, and I'm going to find opportunities at the bottom and sell them on the top. So that is finding the best time frame. So now that you guys know about the time frame, we're going to then move on and see how we could identify the support and resistance at different time frames and how you could use this to your advantage. And then we're going to observe the volume, and then we're going to talk about moving averages, and then the MACD. So, as I mentioned earlier, so support and resistance. So, support is basically when the price is going down, there's an expected like pause. Like the price is not going straight down. It's bouncing up. So there is a support. So think about it, someone is holding that for you. So you're not completely falling off the cliff. So that is what we call a support. And then on the contrary, resistance. So resistance is if the price is going uptrend and then it's having a hard time to keep going. It's having a hard time. You feel like there's a rejection that it keeps rejecting this price. So think of it like, no, you stop. You can't go further. So this is the supply and demand. So I'm going to show you what that means using the chart. So again, this is the Bitcoin USDT, and I will usually go for the 1 day. So let's go find the support and resistance. Support and resistance, again, these are all drawn by people, so it all depends on what people see in the chart. So Bitcoin tends to move with whole numbers. So you have 32, 36, 40, 44, 48. That seems to be the most activity. So what I will do first is that the 1 day chart, I would say draw a horizontal line, which is right here in the trading view. And then I would choose an activity right here. So as you can see here, there's a lot of support here. So see that price, it gets picked up right here, right there, right there, right there. It seems like the price of Bitcoin is not going down below this. So that is one support. Then I would go and make another support. So I think this is a good support here at about 32. So you can change that setting. As I said, I like doing whole numbers for Bitcoin because that's where I think most activities are happening. You see that activities in the 32. And likewise, you can just go and see, oh, there's a lot of activity here. So let's fix that. Oops. So I would fix that into a whole number of, say, it's 46. Okay. Oh, sorry. What was that? Sorry, it's not 46. It is 41,000. Okay. So I would say that there is a strong support around the 41,000. And then it did reach the 32 and got picked up. This was yesterday. So this is how you find the support. Resistance, on the other hand, that is the price, or that is the line or activities on the top. So I would say there's a big resistance here, right? So that is, let me fix that and put that into a whole number. Okay, so this is about the 58,000 mark. All right. And then, of course, the all-time high. Uh, so 65. Okay. All right. So you can draw as many lines as you want. but these are like the major ones that I'm showing you right now. I would also would like to draw one here because, all right. So this is 45, oh, 40,000. Is that 40? Okay. I thought I drew one there already, but okay. Okay. For some reason, I thought I drew one there already, but okay. So is that clear for you guys now that there's lines that you understand that there's activities that say at the 40 ones? It was once a resistance and then it got rejected here and got picked up here at the support. There's a lot of buyers here. And then you see this breakout? That was the resistance. And once the resistance is broken, that is what we call a breakout. You see that big green candle right there that pushed Bitcoin all the way here. And that's the new resistance. Got rejected, trying to test the resistance, it went up a little, rejected, and then until eventually it broke out. So likewise, so you could see here, that there must be a support right here too. So you can draw one here. But what happened in the recent days, so we're trying to test the all-time high. It got rejected here at the 58,000 mark. And then it just went all the way down, couple of days of red until it hit one of the support right here at the 32 and got picked up. And now we are consolidating at the 40,000 mark. Okay. So you guys have any questions so far about resistance? So this is the trend line. So a more solid trend lines are the horizontal ones. The ones that you draw diagonal, like the ones that you draw on an angle, they could be like they're not as reliable as the horizontal ones. So I'm gonna draw another trend line here. This is what I usually do. And a trend line is composed of, if you could find a trend, and why don't we draw a line to it, right? To validate it. So here I would draw something right there. And a true trend line gets hit at least 3 times. So I got one there, there. So 1, 2, 3, 4, 5, and the breakdown. So as you can see, this is a really good trend line for Bitcoin. As a matter of fact, I've been posting this, that this trend line was broken at the 58,000 mark. And look what happened. So this is what traders are looking for as an opportunity to sell. All right, so that is one of the trend lines. So the next part that I'm going to talk about is volume. Okay, volume is very important. So if there's nobody trading an asset, then it's very hard for you to trade, right? Because there's nobody on the other side of the table to buy whatever or sell whatever commodity that you have, right? So the more volume, the more liquid, the better it is. So you can move in and out of the market. So a lot of people ask, what is a good volume? What is considered a good volume? Well, a good volume should have about 20 million to 25 million dollar volume. So you can do that by calculating stock price times the average of daily share. So for example, the stock price is $60 and then there's 400,000 shares being traded. So that's equals to 24 million. So that's considered to be liquid. So also I want you guys to understand that volume is the number of shares being traded. Traded meaning buying and selling, not just buying, not just selling. So these are the activity. So I like to use Doge and Elon as my example for volume. So here I pulled up the chart here, and I'm going to use the volume indicator. So you can just type in volume, just volume. Okay. All right. As you can see, you guys probably remember what happened. So Elon tweeted right here. This was the Super Bowl, I believe. This, oh no, this is April. So Elon tweeted, I'm on a daily, and you could see an increase in volume, 427, right there. So there's an increase. So this was already dissipating, and all of a sudden the tweet came out, right? So there you go. Here comes the activity. And then he did this post, he did this interview in TMZ, and you could see there's also volume, but the volume is not only just green, but there's also
Can
people
you just
cashing
be
out.
funny?
Can I go ahead?
Oh, I'm sorry.
Oh, it's okay. Okay, so there's also people cashing out. So remember, volume is very important when you're trading. So if you look at Bitcoin, I'm going to add the volume here. As you can see, there's a lot of activity happening here, and there's a lot of selling. And likewise, just yesterday, there's an increase of volume right here. That signifies there's a lot of people that sold the asset. So you could also have like the great TA or the great trend line, but or the best indicator telling you the price is going to reverse. But if there's no volume, then there's nothing that is firing up this rocket, right? So you need that fuel. So that is for volume. Okay. So moving on, I'm going to talk about moving averages. So moving averages tracks the price of security over a period of time and plot it as a line. So this line is smooth and it fluctuates to get a general idea of the trend where it's heading. So this is used to identify again the support and resistance level, because the support and resistance is what traders are looking at, right? So this is where we're going to buy at the support and we're going to sell at the resistance. So the moving averages formula is the sum of prices divided by the number of days. So you guys often hear the 9-day moving averages, the 20 moving day averages, and then for long term, we use the 50-day, 100-day, and 200-day. And as I mentioned earlier, short term could be from 3-day to 50-day. So I want you guys to fully understand this because I believe moving averages are very important. So here's how you calculate it. So for example, a 9-day moving averages talks about or takes the moving averages for 9 trading days. So here's the number of days, 1 to 9, and here's the price of the asset. This is just whatever. This is all random. I just typed this. So you take those numbers, add them up, and then divide it by 9 because that is the number of days. So 9 days, if you think about it, that is 2 weeks, right? So that's full 2 weeks trading days, probably in the stock market, but for crypto, that is 9 full days. So equates to about a week and a half or close to 2 weeks. So if you look at the price of moving average is 11.2 and today's price is 14. Today's price is higher than the moving average. So that means that you're bullish, right? Because you're higher than the average of the 2 weeks price. So what happens the following day? The following day, then you will omit the previous day and then you will add the new day. So this will get omitted and then you add the new day. Thus it's called moving averages. And then you use the formula, and then here you say, for example, your moving average is 11.8 and today's price is 15, so you're still above the moving average, you're still good, so you're still bullish. So so if you think about it, this concept, right? So your price today is higher than the averages in the past 9 days. So that is a good information. So that's also true. So think about the 20-day moving averages. So for the stock market, that's 1 month, right? So if you're above the 20 moving day average, that means you're bullish. So you're above 100-day moving averages, you're bullish, right? So that is when you're like, okay, so this the trend is going up. Now, this is also where we can find problems when they do a crossover. So I'm going to show you what moving averages are in TradingView. So this is our Bitcoin, and then I have the 9-day moving averages right here in blue. And obviously, it has been not a pleasant day or weeks, couple of days for Bitcoin, as today's price of 41,000 or close to 42 is less than the 9-day averages price of Bitcoin. So similarly, for the moving averages, say for 20-day, it's under the 20 moving averages average. Similarly with the 200. Okay. So I wanted to point this out to you guys because most traders use moving averages as support as resistance, as I was explaining earlier. Here is the 200 moving average. Did you see what happened when the price of Bitcoin hit the 200 moving day average? This is a sign for most traders to get in. That is a support. That is a major support. And that is why it didn't continually go down. It did hit a lower price, but there's a lot of buying pressure to keep the price up above or around this 200 moving day averages. So right now we are hovering about the 200 moving day average. So if we go below this, then it might be a signal for the Bitcoin bear run. Okay. So that is something to keep in mind. Okay, so the next topic is MACD. So now that you guys know what moving averages are, we're going to move on with a MACD. So MACD stands for Moving Average Convergence, getting together, divergence, MACD. So you know what moving averages is? Now we're just going to have to worry about the convergence and the divergence side. So this is the trend that's following the momentum. This is the indicator that will tell us where the stock price is going. So what you need to know here is the blue line, that is subtraction of two moving averages. It is 26 and 12. You guys don't have to know the mathematical behind it, but that is the blue. And then the red line is the signal. So if the blue is on top of the red, you're bull. But if this crosses, that means a potential change in pattern or direction is about to occur. So as you can see here, and then you can also see here is the histogram. The histogram is a built-in indicator for the MACD. It's just basically to predict what is about to come. So they come they it's a helper of the lines. Okay, so I'm going to show you this in TradingView using Bitcoin. Okay, so now we have volume. So indicator, you use MACD, and there it is. So I want to stress that MACD is a secondary indicator, okay? So I don't want you guys to use this as your primary indicator when you guys see a convergence or divergence that, you hit a trade. This is to support your support and resistance, your first initial analysis, okay? So here, let's look back in January when you're bull, 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 and all of a sudden there's a drastic change right here. So you can see the prices went down. And then here is a major change when it shot up and broke the resistance. And then sellers started selling because it hit that new previous all-time high. And then it goes down and it goes down and then the flip up and down. And then recently, as you could see, um, it's it is going down, like it's not reversing yet. So the red line is still on top of the blue line. So we're still in the bearish sentiment. Okay, so that is how to use the MACD. Okay, so moving on. So we just finished the first three parts of the presentation. So I want to know if you guys have any questions or comments or anything that you guys want me to go over.
Yep, I'm good. This is great, Gladys. Makes a lot of
Okay,
sense.
good. Good. Okay. All right. So moving on. So now we're going to talk about strength and momentum. Um, we want to identify what is oversold because you guys always hear traders like, oh, it's oversold. Oh, it's overbought. What is that, right? Like, what is overbought? What is oversold? And then I want to finish with the Bollinger Bands, then conclusion and other classes. Okay, so how to identify overbought and oversold with RSI? RSI stands for Relative Strength Index. So this is a momentum indicator. This is like the measure of how strong your traders are, how strong the bulls are, how strong the bears are, right? Bulls win, bears win. You guys always hear that. So this is how we measure this. So this is displayed as an oscillator, as a graph that measures from 0 to 100. So you guys don't have to worry about that. But the main takeaway that I want you guys to understand is that what is measured as overbought is if RSI is over 70%, and what is oversold is when RSI is below 30. So what I mean is that overbought territory will be somewhere above these lines right here. Oversold this line, right? So if you're a trader, are you going to enter with the overbought or oversold?
Oversold.
Oversold. That's right. Yes, because there's a lot of supply there, then you can purchase, right? So here you have plenty. So you'll have more opportunity for an increase, right? Because you're overbought, you don't want that. So this is when your patience is tested, right? So this is the FOMO part when you see prices going up, prices going up. So so I'm gonna show you in Trading View. But there's also a caveat here for this RSI. And I think Bitcoin is a really good example. Relative Strength Index, RSI. There you go, RSI plus. Is that correct? Okay. So it has been overbought, right? But if an RSI stayed in overbought territory for 4 days, you are considered embedded. That means that you are super strong. It's like really hard for you to take down. That's so much strength. Okay. And then eventually people are going to take profits and it will kind of cool down here. So in the middle, you distribute the price when traders relax, when trading is just going sideways. So that's fine. And then all of a sudden, you hit this oversold territory. This is a strength. So people want to buy here at the bottom. As you can see, it's gathering strength. And then you might want to sell here. So always sell on the strength. Always sell on the strength. This is very correspondent to your MACD as well as your resistance line. You see that resistance line? Boom. So let's look at the recent events. A lot of people are watching the 200 moving averages of Bitcoin, including myself. When that thing hits that 200 moving average, as you could see, no more strength. Volume is red. Look at the MACD. So here, I want you to realize that you need to combine all these indicators. Not one indicator is the right answer. You have to combine all these things and to understand to analyze what is going on so you can better equip yourself to what's going to happen, right? Um, Obviously, you're not going to be right. There's going to be a lot of manipulation. There's going to be a lot of news coming left and right that we can't control. But the best of your ability, you at least know what your entry and your exit, and with the help of stop loss, you are preventing further risk or further loss. Okay. So now that we know all of these indicators, so I put it all here, I would like to move on with the Bollinger Bands. Okay, Bollinger Bands are um, basically what turned me on into technical analysis. So Bollinger Bands are envelopes plotted at a standard deviation above and below the simple moving average. Simple moving average is the one in the middle. This is the 20-day moving averages in the middle. Then there's 3 lines. The simple moving average, as I mentioned, is in the middle, and then the upper band, and then the lower band. So think of it as like a band that's being stretched. So this the stretcher, like the more that you stretch it, the more stressed it is. And the more stressed it is, the more volatile it is, right? So here in the smaller band, they tend to be closer to the middle, to the 20 moving day average. But then you see this is getting extended, extended, and that is where the volatility comes, right? And then boom, the band snaps and they try to come back. And but in this case, it went all the way down at the bottom. So how we measure this is a composite of a lot of data using standard deviation. So this is typically the 2 standard deviation right here from the 20-day moving averages in the middle. So I like to think of it this way. This is how I understand remember when you guys in college or taking a test, you have 500 students in your general class, and you are took this final exam, and then you have this distribution of exam scores. Some people have 40, 50, and then most of the people get about 75, in the C, and then there's a few of, the stellar student that is in 90s, right? So what happens if you plot them all together is you will see most of the students land here in the middle, which is the 1 standard deviation, which is the 75%. But as I mentioned, there are some who gets like the 60s, and there's some who are get like the 90s. So the lower band will be the ones who scored lower in the test, and then the upper band who scored higher in the test. But what it comes down to, you normalize it, you bring it down into the middle. So same as stock prices tend to come back in the middle to the 20 moving day averages. And that is what you can use Bollinger Bands for. So Bollinger Bands, I've heard a lot of story people using it for day trading. From experience, don't do that. It's basically used for longer investments. So I always use Bollinger Bands. Um, it's perfect with the other indicators. So it will be, I have it already in, but I'm just going to show you. So you just type Bollinger Bands. It's right here. It's not Bollinger Band strategy. It's not strategy directed. It's Bollinger Bands. Okay, so you click on that. So when you click on that, you will see this band. I'm going to get rid of some of the indicators just because it is confusing. Okay, I just turned on all of them. Hold on. Okay, MA. Get that and get rid of that. All right. So here is your Bollinger Band. So I'd like to look back in the past because we are analyzing, right? So as I mentioned earlier, when the band is getting extended, there's a lot of volatilities going on. And what tends to happen is it goes back right in the middle. So you can see that sell off, sell off, sell off, right around the middle. And because there's so much strength, it didn't even touch the bottom part. You are embedded in the positive region, and so as your RSI, that is your strength. The minute it starts selling off, you start here in the middle of the band. You follow the middle of the band and look at your RSI. You are just fluctuating inside, right? And also your MACD, there's not a lot of big switch, there's not a lot of big convergence that's going on here. So, and then all of a sudden, here we go again, you start that increase in price, but then the bands get stretched and then it starts to go back in the middle. And then here, there's not a lot of action going on. So the band is a lot smaller compared to this, where there's a lot of volatility. So And you see here, so as a trader, as a swing trader, I would use Bollinger Bands to tell me when to enter. I would enter here. I would not enter at the top of the band because I will end up in the middle of the band, right? So you want to enter here for long term. And then you would set your stop loss. Basically, if you want to lose zero, right, you set your stop loss right here. This is a really good indicator. As you can see at the bottom of the Bollinger Band, you see this really bullish candle. So that is a buy signal for me, at least, and is followed by the really green candle. And then, all right, I will let this play. And then from here, I will probably protect my profits the minute I start seeing the Bollinger Band not totally extending, but flattening, looking at my RSI, not going to the super strength, super momentum part, and then probably sell off here. And what happens here? Sold off, and here middle band, and then here Bitcoin is now currently in the negative bias of the Bollinger Band. So for long-term investments, I would, I'm not advising everybody, I would look at this and say, this might be a nice swing play for me. As there's a lot of buyers, see that candle? It didn't go all the way down. There's a lot of buying. Every time it hit a support, it's getting picked up. And it's the bottom of the Bollinger. But I'm not seeing the strength is starting to become better. I'm not seeing a change in the MACD just yet, but I will keep a watch on it. Another thing that you guys should also notice is that the 20-day moving averages is going the opposite direction. It's going down. So that is how you use the Bollinger Band. I would not recommend for you guys to sell, to buy, to sell, to buy at the short term because that is a little dangerous for Bollinger Bands because sometimes they tend to just go sideways, and there's probably not a lot of volume as you would like. But for long term, these are good indicators for when to exit a good investment. All right. So, okay, so we're right on time. Yay. All right. So, in summary and conclusion, I hope I showed you how to use TradingView briefly and how to use the paper trading. I also have showed you and explained to you the candlestick anatomy of the green candle and the red candle, as well as the doji candle, the ideal time frame for trading. So from here, just review, look at the bigger trend. You don't want to make your own, trend. Like you don't want to make your in the market, you just want to follow the whales, right? You follow where the money is. You don't want to create your own trades. Support and resistance is very important. How to draw trend lines. Horizontals are very dependable. The lines that I drew earlier, the not horizontal ones, the other trend lines, the side ones, um, you need at least three candle wicks to hit it to be considered as a true trend line. And then I explained to you what really moving average is. So I like moving average. I use them all the time. A lot of traders use it. It's very popular. So you might want to, if you want to decide on trading, you might want to look at what most traders are using because that's what's going to happen most likely, right? Because if you're seeing the same things, you guys are reacting to the same things. And the moving averages are almost always what traders are using as a guide. And of course, the MACD and RSI are my secondary indicators, not my primary. I would not use it as to tell me to do a trade. As my primary, they are just secondary. If I'm seeing a pattern, if they're confirming what I think is happening, they are useful. And finally, I talked about Bollinger Bands, how it is a two deviation, why it tends to go in the middle, and why an extended one means it's very volatile and why it's being stretched, and when is the best time to get in and not to get in using the Bollinger Bands. So in the end, I want you guys, the main takeaway from this is to learn that the trend is your friend. Look at the 1 week, see if there's any trend, go into 1 day, see if there's any trend. If you find a trend, draw a line. There goes your trend line. And then go into your 2 hours. And if you're going to do a day trade, 15-minute is very good. And then the 5 minute. I don't recommend the second because that will probably drive you guys crazy. I don't even use a minute because that's just too crazy. So, and that is it for my topic. And before I end, I would also like to say that I do have, I also designed another class to give you a more in-depth technical analysis training. So what I've given you is a bigger picture, how I understand technical analysis. I'm a mathematician, I'm a biochemist, I love math, and this is how I understand these indicators, and this is how I would use them. So very important with technical analysis, understand what you're using. You don't just throw things like moving averages and not really understanding what it is. So I designed a class that I would be able to explain to you what these are and how to apply them. So if you guys are interested, let me know. My email is right there, and probably Chelsea will probably I'll be in the group. You guys can message me. And what this technical analysis course that I designed is basically a whole lot of stuff. So looking into deeper into a lot of indicators and how to really use them. So here I would talk about how to not blow up your account, and then talking about the things that we talked about today but deeper, and then Fibonacci strategies, which I absolutely love, and a lot of people in crypto uses it a lot. The broadening bands and so forth. And I'm also going to take you to common patterns like cup and handle, head and shoulders, dead cat bounce, and then talk about the other indicators other than the strength, other than the RSI. I'm going to talk about stochastics, and I'm going to touch upon candlestick analysis and what our profitable candlestick strategies patterns are. So, to end, I would like to thank you for your time and for listening. And I would like to thank Chelsea for organizing this event. And I am going to take questions now, if you guys have any.
Awesome, Gladys. I enjoyed it. I know I learned a lot. So
Okay, great.
I was taking notes too. I do have a question. Just curious. I know you are charting out the Bitcoin right now.
Mhm.
From what I'm hearing and from what I see is that the moving average, the 200-day moving average, the critical level to break is
Yes.
43,000. Is that what you see as well?
Yeah. Yeah. 200 is critical.
So looking
Yeah.
at where that falls, I just thought that was kind of interesting to point out that right now we
Yes.
kind of pushing up towards that, but once we break past that, that's a good sign, right? That's a bullish
That's a good
sign.
sign. Yes.
Yeah.
Yes. That's a good sign. This is actually, yeah, I did post this. I've been posting that 200 MA like last 2 weeks ago at the 51% crew. I'm like, guys, we're really nearing it. And people are like, I know, it's so close. So it's actually, this is my actual chart for BTC. And what I
And
love
just so
about
everyone
this,
knows, when you sign up for TradingView, any chart that she posts, you can actually see in TradingView. So
yes.
you can actually see her charts along with where she posts them. So this was a great overview. I think, you have a lot to definitely offer to women who want to learn to trade, and you don't make it as intimidating as whenever I learned a few years ago. So I will say that when I learned, I was learning the hard way. I took the long road. But you definitely, have it concise and easy to understand. So I definitely appreciate you coming on and explaining to us, how to understand the basics. And I think that was a great introduction for TA. So
Oh,
perfect.
thank
I
you
don't
so
know if anyone
much.
has any questions, y'all feel free to ask. You have her right here. So I know we have a few people still on. I think it'd be great if anyone has questions or maybe more in-depth details or any questions about a
Mhm.
specific indicator and maybe how she uses them or whatnot.
Yeah, I just want to add on to that. When I first started learning TA2, I was very intimidated because it's male dominant field. And it's, as a woman, it's really hard to enter a space that is dominant by male who's like, you're wrong, is very aggressive with their Ta. And it took me a while, and it's just basically understanding. I like understanding things and the concept, because once you understand what moving averages is, like 20 higher than a month ago. All right, so that makes sense. You're not just throwing 20-day moving average. You're not just throwing 200 moving averages. You understand the implication or the impact. Oh, okay. So yeah. So this is I just gonna go over the BTC I just saw my internet is not stable, but sorry. All right, so this is basically the chart that I have in TradingView. As Chelsea had mentioned, if you guys sign up on TradingView and follow me, you guys can get my chart. And if you click here, all right, it should update it. There you go. There you go. So it did follow the line that I drew. This is the 200 moving day average. That is my support 3. So if you guys know how to do technical analysis, you guys can now start charting the uncharted territory. So that is where I would like to take you for the course that I'm teaching. Am I still on? Hello?
Yeah. No, you still on.
Okay.
You good. No, that's
I'm
great.
like, did my
Yeah.
internet go away? Sorry.
Sorry,
So
I
I'm
had
like,
me on
oh
mute.
my God.
No,
No, it's
perfect.
okay.
Perfect.
So yeah, so similarly, so yeah, I do have a lot of charts here, and yeah, it's, I hope that you guys understand and learn from it. This is Ethereum. There you go. It broke my line. And here I have, it's actually sometimes surprises me when I do support. See that yellow line? I drew that weeks ago, and that was the previous resistance, and it played as a really good support. So again, big picture, one day, draw those lines. Like the institutions, guys, don't buy Ethereum at say 2030, they buy it at whole numbers, 2000, 2001, 2002, they put an order 2500. They don't put an order for 1983 like you and I do, right? They don't do that. So whole numbers, this is where the actions are, similar with stocks like Amazon moves by 100, by 50. Tesla moves by 20. So know where these actions are, just draw those lines, and you'll be fine. Like when I first started TA, I saw all these lines, and I'm like, oh my God, what are these things? Then you sit back and you're like, you know what, I'm gonna draw my own lines. I'm gonna go find a trend and I'm gonna put a line on it, and that is my trend line. So that is how I would approach TA, and I hope you guys get that idea from today's class.
Hey,
Yes,
I
go
have
ahead.
one question. So on TradingView, you can follow anyone and you can see their charts, I guess?
Yes.
That's what you're saying? Okay. That's very interesting. Okay. Nice. Thank you.
You're welcome.
Yeah, and I do encourage everyone, like she showed earlier, start paper trading, start getting these indicators on the chart, start trying to process and understand what they mean. If you have to refresh yourself with the basics on what candlesticks are, I mean, you don't have to absorb it all in one shot, right? I'm sure this takes time to learn. And so the best option is to start paper trading. Just start applying those support and resistance line. Just make as if you take a trade, and then you can back test and see how accurate you were. That's the only way you're going to learn. And then, like you said, you have a community of us. And I know your other group that we can actually plug in as well. I know you post a lot more charts and stuff there too. So a lot of us can go and follow you there and kind of catch, because that is more of a more of a trading heavy group.
Yes.
So anybody who is interested to jump to that group, I think that's a good idea as well. So I enjoyed it. So I appreciate you taking your time. I'm sure all of the other ladies that are going to watch this replay is going to appreciate it. So I'll get the recording out as soon as possible.